But let's move right on. And as promised, FMCG is in discussion. Are we going to see the festive fervor aiding rural demand? What is the outlook on inflation hurting the overall consumption space? Sunil Duggal is the former CEO at Dabur, and we've also got Akshay Dsouza, Chief of Growth and Insight at Bizom, now joining in. Thank you so much for taking time out, and would like to get in a sense from you then, Mr. Duggal, first up, as to what the outlook is when it comes to the festive season. Are you sensing that, given that it's a delayed festive season, that some of the concerns when it comes to the high raw material prices or high inflationary concerns could perhaps be assuaged by the strong festive demand?
It doesn't look that way as of now. I think the festive demand could be very, very muted, even though the festive season is a little bit rear-ended at this time. Diwali is around mid-November. But I don't see any triggers to spur demand, particularly in rural. The inflation remains high, and that's going to cut into the consumption basket. The overall sentiment is weak in terms of consumption, with the monsoons being very erratic. And the only trigger could be, extensive government stimulus pre-election, but whether that will really move the needle in terms of demand, particularly rural demand, is yet to be seen. So as far as the staples sector is concerned, I think we are going to see 2-3 quarters, maybe 2 quarters of subdued demand, and after that, things could perk up, leading into the 2024 elections.
Sunil, if I look at some anecdotal data, which is credit card spends, retail credit growth, the kind of indications which we are getting, let's say, from a Maruti in terms of the dispatch numbers, all of them are telling us a very different story. While the rural economy is under stress, it is not that the consumer is shying away. Otherwise, why would retail credit grow? Why would credit card spends go higher? There's something happening in the economy which seems to be very transient, I guess.
Where credit card spends are not material and Maruti caters to a different segment. I'm talking about staples demand, bottom of the pyramid demand, the everyday groceries, etc., etc. And that is one area which I feel that the demand seems to be chugging along in the low single digits. And I don't see any triggers for a revival happening in the next, say, couple of quarters at least. Now, things may be different in the discretionary space, autos, etc. The numbers do look much better there. But that's a different segment, and I don't think the two are correlated.
Akshay, if I could get you in on the discussion, when it comes to pure play FMCG, what's been your observation? Typically, you think, high edible oil prices, high input prices, do they really dampen spirits when it comes to buying FMCG goods? Because some of them are something that you can't do without, irrespective of what the pricing is going to be. Akshay, if you could come in on this one.
Sure. So I think one of the things that you have to actually see from an edible oils is critical to almost a large number of FMCG products as an input cost, right? When I now look at edible oils year on year, we are down 40%, which is great news for almost all FMCG companies. What it means is it gives a lot of these companies the flexibility to now offer greater volume at the same price. And that's what we're seeing happening in many categories. So while we actually now have the run into Diwali, which is in November, I do expect to see a whole lot of activity starting right about now until, say, the middle of October, in terms of heavy stocking that I will expect to happen at the store, where they will try to capitalize on the Diwali demand, so to speak, the festival demand. But that being said, when I look at all this data, I think one of the things that was a little concerning was the rainfall, which was again very transient in nature. And we were staring at El Nino fears, the whole the effect possibly of a washed out monsoon. But I think September kind of has eased off some of that fear. And I think when I look at also the export measures, the export control measures, if I can call it that, the government has done on wheat, on rice, also on stocking a lot of edible oil for the season. I think what it tells me is that the price on these are going to come in control as government releases supply in local market. So I do expect that while August may have been subdued due to maybe the blip of the rain, there definitely could be a boost in demand as we hit the festival in November.
Mr. Duggal, wanted to get in your take because data is indicating that local brands have grown by nearly 13% in terms of volume between last April to this one. Is there actually a space for them in terms of taking on the fight to some of the larger, more well-established companies?
Well, look, that's an indicator of the demand stress. People downgrade to local brands when incomes are squeezed. And that's probably something which is happening now. And typically when incomes are buoyant, the local brands ebb away. So I would take it as one lead indicator of the demand stress. Now, which could turn around, you never know. Edible oils is certainly a benign input cost, but there are many others which are highly inflationary, petroleum now. And so on balance, there is inflation in terms of the margins. Companies are sitting on much higher EBITDAs than they were, let's say, the same period a year ago. How much will they be willing to pass on that is a matter of conjecture. How much will that stir demand is again a matter of conjecture. We could hope for the best. But as far as I'm concerned, the outlook remains subdued. I don't think it's a gloom and doom scenario, but it's certainly not anything to be very excited about.
Sure. Mr. Duggal, you must have seen such cycles many a times, right? When food inflation or agri-inflation does, perk up and does sort of throws off the household budgets, if you will. What's been your reading and understanding of the many decades that you've tracked the sector about how a consumer typically behaves as opposed to, premium products versus mass products versus essentials?
Well, the highly discretionary products, the demand remains unabated, and I think there's enough data to validate that. But it's really the bottom of the pyramid stuff, the everyday staples, which are stressed. And these are very sensitive to price movements and to income levels. So we've seen, a dozen cycles of ebbs and flows, so nothing to get alarmed about. I'm just talking about the near term. The outlook does not seem to indicate any strong revival of demand. I hope I'm wrong, but the festive season would be materially different from what we've seen the last couple of quarters. But I don't see any indicator to validate that particular hypothesis.
Akshay, what about the other end of the spectrum, the ultra luxury, the ultra premium? The data there is very, very encouraging. Do you think that gap, Akshay, between rural versus ultra luxury is going to coexist, Akshay?
Yeah, for sure. I mean, I don't really see, inflation really eating into consumption of the ultra luxury products really in the market. Now, even if you look at some of the, FMCG companies who actually work on premium brands, at a certain end, you see that the premium brands continue to grow, whereas the mass segments is where the challenge really lies. And I think we may be seeing a lot of downtrading on the mass segment, but nothing much shifting on the premium end, even from a consumer standpoint. But that ultra luxury segment, I think they are almost inflationary proof. And the fact that you actually now have availability of a much larger set of products within the country, I think it just makes it that much easier for them to procure and kind of grow on that front.
All right. What's the sense that you're getting as well, Akshay, when it comes to looking at the overall volume growth across categories? Are you seeing some specific categories outpacing the others? And if so, which would they be?
So volume growth, I think, critically will, until now, one of the things that we've seen, and I'm looking back again at August data for you to get, because that's the last piece we have, we did see some downgrading for sure. That being said, I think a big driver of volume is going to be the festival, because it's one of the biggest consumption triggers that we have in the year. And with the rainfall, in the backdrop of the rainfall now getting back to normal, while we do have certain crops where the yield is going to be much lesser, especially in rice and so on and so forth, you still think that there may be a volume play in place where people are actually now from shrinkflation earlier, now they're also looking at increasing pack sizes at the base, which is essentially going to be a volume play. And I see that happening a lot more in the segment as we kind of build up the festival.
All right. Appreciate your time, gentlemen. Thank you so much for joining us and giving us an insight as to how things are shaping up within the entire consumption and FMCG space.